This one. Hello, hello, hello. Can y'all hear me?
We can hear you.
All right, awesome. So I had some technical difficulties setting up my new blog cam. So yeah, we dropped the monitor. So I'm operating off of one screen right now. But I'm gonna let a couple more people get in here. I'm gonna adjust this fan because the air conditioner has not been installed yet. And baby, the level of heat that it is, 88 degrees in Texas. You see my background, GoFundMe is not an insurance policy. So we're going to get into insurance first. I'm just waiting on a couple more people. And y'all know how I said I was going to make it where you had to be a subscriber in order to get in. I didn't have an opportunity to do that today. So do me a favor, like and subscribe. And then next Tuesday, you ain't going to get in if you're not subscribed. So let me introduce my guest. She's also a licensed insurance broker. Her name is Miss Carmen Bradley, and she's licensed in multiple states as well. So we're going to be kicking some knowledge to y'all about generational wealth, generating generational wealth, creating something for a legacy to leave to your children and your children's children instead of using it all and spending it all on frivolous things that we really don't need. Okay? So, with that being said, I'm waiting on my come on because I broke a screen, so I can't jump from screen to screen. So, yeah, I'm stuck on this one screen for now. But what I'm gonna touch bases on first is the difference between term life and whole life. So, term life is exactly that. It is for a term of your life. It can be 15, 20, or 30 years maximum. So that means if you're 50, you have to pass away by the age 80 in order for your family to inherit that term life policy, in order for them to be able to get the funding from that term life policy. If you're 30, there's no point in you getting a term life policy, even though it is the cheapest, because it does not grow. Not only does it not grow, it's only valid for 30 years, and it can convert over into a whole life policy. But why would you pay for it to convert over into a whole life policy at the age of 60? Carmen, do you mind pulling up the quoter?
Sure.
While we're waiting on a couple people to come in, we're gonna pull up the quoter, and she's gonna do an example. Let's do California.
Okay.
Do an example of California, someone aged 30 years old. Can you open up the term quoter first before you do the whole life?
Okay.
Can you switch it over to term? We're going to do somebody age 30 years old in the state of California. We're going to give you a quote on term life, and then we're going to give you a quote on whole life, and we're going to explain to you the difference between the two of them. And then we're going to, once we finish this, we're going to go into the IULs, and then when we complete the IULs, we're going to go next and talk about credit, how to build your credit to make yourself be able to be credit worthy, because in a minute we're all going to be going digital, so you have to be credit worthy in order to get somewhere where you're trying to be. You can't stay stuck where you're at. So if your credit is not good, if my iPad ever comes on, I am going to show you guys a list of, I might can just put them in here, of the companies. Hold tight for me, guys.
I have the tool up whenever you're ready.
All right, so we're going to do California. No, let's do Tennessee. Do Tennessee, age 30 years old, term life 100,000. And do 30 years.
Okay.
Do 5'11", 180 pounds.
Okay. Non-smoker.
Yep, non-smoker.
And you said 30-year term?
Yep. 30-year term.
Okay.
So what did you get for the price for 100,000 for a 30-year term?
Well, the rates came in as low as $11.69 and as high as $36.85. So there's a range for sure.
Okay. And do you have the 5-star company there? One with a star by it?
I'm sorry, say that again.
You have one with a star by it?
No, I don't see any stars.
Okay, so the one for $11, is it a guaranteed issuance, or do they have to go with underwriting for that one?
It says preferred 30.
Okay, so preferred means underwriting is required, and that's for $11 and how much?
69 cents.
$11.69 is what you can get $100,000 worth of term insurance. Now, here's the thing about term. Term is only going to be for 30 years. You heard her put in a 30-year market. So that means that person has to pass away by the age of 60, or it will be able to convert over into whole life. So before I go into the difference between that and whole life is this: you cannot borrow from a term life policy. There's no loans, there's no savings in it, it's not invested into the stock market. It's just a flat rate of 100,000, and you have to pass away by the age of 60. Now, go and do me a favor and put switch that age from 30 to age 60.
Okay.
And let's throw the common thing in there for somebody that's age 60 in our community, in our culture: diabetes, possibly heart disease. And we're going to keep it at 100,000.
Diabetes and heart.
Yep, and heart disease.
Okay. Still at 30?
No, we're going to give them age 60.
No, how long the term?
No. 30 years. 30 years.
Okay.
So that'll give them to age 90. Tell me what comes up, because I don't think anything's going to come up.
No. Decline.
Okay. Decline. So somebody age 60 cannot get a whole life policy. Okay? Cannot. Hold on one second. Now, switch it over to term life for me. To whole life for me, if you don't mind. keep it at the same age of 60.
Same medical history.
Same medical history.
So there's a star. The monthly rate would be $514.
So the reason I made her do it that way is because when that person that's 30 right now turns 60, it would be $514 for $100,000. But not only is it $514 for $100,000 worth of life insurance, you have to be able to pass underwriting. Anything over $75,000 is fully underwritten. So you have to be able to take an exam to get that, meaning you're going to either give blood or urine. So it's better for that person switch the age to 30 right now on that same thing and take out the heart disease and diabetes. It's better for the person to get it while they're young, because you guys heard her say $514 a month.
Yep. So
now keep in mind, at 60, you gonna be probably retired, so security might not be around. We got all of these things that play factors. Are you really gonna be able to spend $514? So if you get it at the age of 30, it'll $100,000 would be how much for whole life?
$103.
$103. And that's going to be the price until age 105. It won't go up. But not only that, depending on what whole life company I put you with or she puts you with, it's going to be an investment policy. And this is what I mean by that. All right. Let's see if I can make that bigger. Can you all see this?
Yes. Can you expand it or make it a little bit bigger?
Let me see. Nope, I can't.
Okay.
It won't get any bigger than that. Let me see. No, it won't go any bigger than that.
Okay.
So this person is age 35. They're 34 right now, non-smoker. They went with 75,000 to keep from having to do the medical exam, because anything over 75,000, you're going to do a medical exam. If you look at age 35, they pay $1,076 a year. Look over at the death benefit to the far left where it says non-guaranteed death benefit. It shows you $75,000. That's how much. Let's scroll on down to age 66 and look over at the bottom. You see the price, the annualized contract premium has not changed. It is still the same $1,076 a year. Look over to the far right. Look at the death benefit. You see it has changed. Now it is worth $90,531. We're going to go on down and say that this person is going to live past 75. We're going to say that this person is going to live to, we're going to say 90. Forget it. Let's say 100. It'll be worth $124,221. That's how much the policy would pay out. If you notice, the price has not changed. This is what I'm talking about, an investment policy, a growth policy, a policy that grows with you. Now, let's say that he wanted to sell his policy because, you know what? I'm going to sell it because I would like to buy me a house at the age of 65 and do retirement. He would have spent $32,270 total from the age 34 to the age of 65. they would pay him to sell his policy. They would give him $35,125. Non-guaranteed. That is as long as the stock market is going. But if the stock market changes, then it would drop down to $27,448. That's still a return of his premium. So let me show you one other thing. At 5 years, guaranteed, the cash value would be $1,594. The price is still going to remain the same. At age 70, if he wanted to turn it in, cash it in because he got another policy from his job that's going to bury him, he could cash it in and get $34,453. But on the non-guaranteed side, it would be worth $45,762. But on the midpoint, which is 50% of the current dividends with the market is right now, it would be $40,108. But do you see where the death benefit has jumped up? It's just jumping up. It's not remaining the same. All right, so how did I get out of that? So that's what I wanted to show you in regards to whole life. So whole life is going to jump up, and it's going. Pam, you couldn't see it. Pam, you couldn't see it. Oh, they expanded it on their end. So that's what I say about whole life, because it's kind of like we all know that everybody has a insurance policy that their job offers. Take that, the free one. But just remember that your job offers you that policy contingent on you being employed there. A lot of the jobs don't allow you to take the policy with you when you leave. That's something that you need to know about. And if they do allow you to take the policy with you when you leave, it's still term life. You can't borrow from it. So this is like your little saving grace. This is something that you leave for your kids. Another thing that I want to touch base on is the child riders. I hear y'all doing this a lot. I have a lot of parents that it's like, yeah, I got my kids on my policy as a child rider. Why wouldn't you just get your child a child whole life policy that can grow, that'll be theirs, and that converts over into an adult policy when they turn 18, and the price remains the same, as well as the policy has been building revenue. That's the part that I need you guys to start focusing on preparing for the future. Because as y'all see my background, GoFundMe is not an insurance policy. And you can get an insurance policy for your children. You can start out at I just wrote one for somebody, their grandchild, 9 years old, $30,000. She pays $20 a month for $30,000 worth of insurance. And it's a growing policy. The policy grows. So I wish I could find the illustrations for that. If my computer wasn't messed up, I would show y'all the illustrations for that. I am so not prepared. So the next thing that we're going to talk about is something that I really, really, really love for kids. So y'all know how we be buying Jordans and now I just seen a little girl in the mall with a Michael Kors bag. Her mama bought her a matching Michael Kors bag. And you know what my mom went to immediately? I would have preferred her to take that little $250 and buy her daughter an IUL and pay it annually. Me personally, let me see if I can pull up Keelan's IUL. I'll show you my son's IUL. Hold on. Let me go back. And the only reason I'm showing this because y'all can't see no personal information other than his name, and y'all know his name, so it ain't gonna make me know nothing. Mind. Hold on 1 second. And I'm gonna let you take over in 1 second. I just want to show this IUL. 1 second. Okay, I'm sorry. Go. I'm gonna come back to it. I'm gonna let you take over from here for a minute while I pull it up, if you don't mind. If you want to move to the credit, we can. Okay. We can always come back to the IUL. And next week when I do it, I'm gonna be much more prepared, you guys. But today my computer literally fell off the screen right before the live generated.
Oh wow.
I mean, my screen fell off right before the live generated. Like literally.
We definitely have to work on that.
Yeah, I'm gonna just order another one because I'm over it.
So just to touch base a little bit on credit and why credit repair is so important. Your credit score is key. We're in the United States, and in this country, you are measured by your credit score. So making sure that you have the highest or the best credit score possible is essential. It's a key factor in your financial health. Credit repair matters because it helps you to get better loans and a credit approval. Life be lifing, so you never know when you're going to need to apply for credit. You can have an appliance go out and you have to replace that appliance short notice. You got to apply for a credit card. Anything can come up, and if your credit score is low, that can hinder you from being able to thrive or be successful in different areas. Having a positive credit score will help you to get a lower interest rate. People that have low credit score pay the most money with interest rates and loans and things of that nature. It increases your financial flexibility, allows you to be able to borrow when needed, as I stated about personal loans, credit cards, things like that. This is what makes this country move, unfortunately. OPM, other people's money. Millionaires don't use their own money. They use OPM all day long. But you have to have a fairly decent credit score in order to access those credit opportunities. If not, then you're going to miss the boat. And many of us do miss that opportunity. Having a decent credit score will allow you to be approved for major purchases, a home, a car, things that people deem necessities, not luxury items. Your credit will be measured when trying to make these purchases. You can get better insurance rates. Most of us have vehicles. We have to get quotes on auto insurance. They're looking at your credit score. And if it's too low, you're a risk and they're not going to insure you. And it gives you peace of mind. Having good credit, being able to access things when you need them, that gives you peace of mind, not have to have stress on you. But you do have to be responsible with your credit as well. You get approved for a $10,000 credit card. Don't spend $10,000. You got to play the credit game. You stay between 3 to 10% of utilization. Whatever you use, pay it off before the statement. That's a whole nother
Yeah, because
talk
let
show.
me put faces on the statement. So you have a bill due date and you have a statement date.
Right.
You need to make sure that when you pay your bill on its due date, you don't use it until after your statement has presented, like after it's already been
generated.
reported. So, for example, my credit card due date is the 24th, but they don't report it to the credit bureau to the 27th. So after I make that payment on the 27th, I got a piece be still. I mean, on the 24th, I got a piece be still to the 27th.
Right. Or the 28th. Wait a day after.
The day
just
after,
to be sure.
I just got to be still because I wanted to report at 10%. 30 is what they say, but I like reporting.
I say under 10. I mean, things have changed. They used to say 30%, but now it's between 3 and 10 is like the sweet spot. And if you can make a double payment, like if you know you could pay a little bit every 2 weeks, try to do that, but try to pay as much down before that statement due date generates.
Before it closes out. Because like one time I missed it and I lost 40 points.
Yeah, because it reported late. And you got that late fee. That late fee is $30, $40.
Well, I didn't get a late fee. I just let it report at like I went out and I was traveling and I needed to pay the bill. And it was just a click of a transfer from one, and I didn't do it because I was in California, but the bank was in Central Standard Time.
Mm-hmm.
And I missed that slot by 2 hours. And it reported as I think like 65% because I was using the card to, while I was traveling. 65% is what it reported. 40 points is what I lost.
And that's a lot. And you have to recover. And
it's easy to lose them, hard to get them back.
Yep. Absolutely. Yeah. So I speak about credit repair and just stay on top of your credit score. You should definitely be checking it annually, if not every 6 months. Things get thrown on your credit, collections, you need to get those items off because that will hold you back.
Yeah, and the most free annual free credit report, you can check that once a year free.
Mm-hmm.
I say don't subscribe to any of these carriers. If you're going to do something, because there's a FICO score, and then what was the other one? Not the FICO. What's the other one?
Vantage score.
Your Vantage. So one, like Experian will give you the Vantage, but TransUnion might give you the FICO depending on what you do. The best place to get your credit score is from your bank, because that's who is they offer it free to you. And they're going to, whatever they work with, like, for example, Navy Federal works with Experian. But PNC works and Capital One works with TransUnion.
So each bank has a bureau they work closely with.
Mm-hmm. Yeah, because you're going to want to get the loan from your bank, mm-hmm. right? That's where you want to get the loan from. Okay, I was able to pull it up. I'm glad. Let me show you guys about the IUL, and then we're going to go into savings accounts as well. So this is my son, so I don't mind showing y'all. You might have to zoom in on your screen to be able to see it. But as you can see up here, this is what I pay monthly, $200 a month for him. You don't have to pay $200 a month. If you can't afford $200 a month, don't pay $200 a month. Plain and simple. Do what works for you.
Within your budget.
The goal is to get it and keep it, not just to get it and then put all this money into it and let it lapse and you waste your money. I have a client right now that is texting me while me and you are on this phone because her policy lapsed, and she needs me to fill out a form to have her policy reinstated, and it has to be done by midnight tonight. So when we get off here, I'm gonna go print the form and sign my portion. But what if she wouldn't have been able to get in contact with me? You know what I'm saying? Then it would have just been gone. So that's something that's so important. Like getting something that you can afford and keeping what you can afford. That's why I always say do $30,000. If that's all you can afford, be realistic with yourself.
Absolutely. And as you grow your policy or get an additional policy as you grow, your finances change.
It's called stacking. You stack a policy. So you do 30,000, you get a promotion on your job. Go get you another $30,000 policy and pay them both. Stack them.
Mm-hmm.
That's what they do. So when you guys hear, I'm gonna say this name, and y'all don't fight me. When y'all hear how Walker be talking about how he created generational wealth, this is what he's talking about, the IUL.
Yeah.
So the face amount, I don't know if you guys can see it up here in the corner, it's $193,128. That's how much his death benefit is. The monthly payment is $200. I have it switching from B to A. I'm going to explain to you what B to A means in just a few minutes. So looking at 5 years, you see that I paid $2,400 a year for him. In 5 years, his surrender value is going to be $7,453. If I decide to sell his policy in 5 years, that's what they're going to give me back. And that's the guaranteed. This is the current market that we're in right now. So non-guaranteed, this is what it was when I signed it up, what the stock market was doing for him. So in 5 years, this policy will be worth $9,843. But look at it at age 70. At age 70, the guaranteed, if I sell it, is going to be $62,457. But his death benefit would be $255,577. Now, this is where we get into it at. This is what I like. Dang, I wish I could make that bigger. Y'all might have to zoom in on your phone. But do you see where at age 71, he's no longer paying his plan premium? He no longer pays for his policy. You see where the zeros are? Instead, the policy will pay him $175,166 a year. Medicare don't pay you. Social Security don't pay you that kind of money. They don't pay you that kind of money. And you see by age 70, he's only paid $134,400 worth of premiums. And I started this at age 14. Okay? So $175,166 a year is what he gets. But look over here at the non-guaranteed death benefit. His policy is now worth $1,900,362. That's what his death benefit is worth at the age of 71. But for the guarantee, it's only worth $255,577. Let me explain to you what the guaranteed versus non-guaranteed means. Guaranteed is what he's paid into it. That's what they're going to pay out. The non-guaranteed is the current stock market. So as long as the stock market keeps doing what it's doing and keeps rising and keeps going, this money will keep rising. If the stock market stops and don't make no more money, if it crashes and don't make no more money, unlike an annuity, he won't, or a 401k, he's not going to lose this. He just won't gain. So it won't grow no more until the stock market come back. But he won't lose this. As your 401k and your annuity, you're going to lose it if the market crashes. First thing that goes is the 401k and the annuity. I know y'all remember what happened in 2008 when the market crashed. So, and then for the non-guaranteed assumption on the fixed rate, let's say that the market just levels out. It's growing, but it's not growing as fast as it is right now today. He would still have $975,588. He would still have that as his benefit. Now, he still would be able to make his still get his monthly payments, whether it grows or doesn't grow. Mm-hmm. But once he starts taking from this, if the market is not growing, then he's moving away from the death benefit. You see where all the zeros dropped up under there? So let's go on down. Y'all see that this is going to pay him $175,166 to age 100. This is what I'm talking about, generational worth. Setting your kids up, because Social Security is not going to be around. They already worried about not having it next year.
Right.
Know what the future holds. So it's better to get started while you're young. And I wouldn't have been so aggressive had I had known about this before he was 14. I wouldn't have felt the need to be so aggressive. But I'm thinking, shoot, I at least want them to have $100,000 a year.
And a lot of cultures will get it at birth.
Correct. A lot of my grandbabies got it at birth.
Mm-hmm.
Their parents paid for it from birth. Look me up. $25. So they building from 25 from zero all the way up.
Yep.
So this is what I mean by building generational wealth for your kids. So, all right. So we're gonna go back real quick. We're gonna touch back on the credit, not on the credit, on the savings. Do you guys know the difference between? I'm gonna ask you, Carmen. Do you know the difference between a high yield savings account versus a regular savings account at like Navy Federal or Chase or Wells Fargo or?
Mm-hmm.
Okay.
So, you know, the basic banks will give you, you know, 0.01% on your savings account, whatever your money is sitting in there. But a high yield savings account, I mean, you can get, depending upon the institution, 4%, 6% on up.
Correct. So I'm gonna put this
So you
gentleman's
can grow your
name.
money faster.
I'm gonna put this gentleman's name in. This is my personal banker. I'm sharing my personal banker with y'all. Now, when y'all call him, don't say, Auntie Blue gave us your number. My name is Carletta Woods. And the reason I'm giving you all his number is because this is who taught me about a high yield savings account. And yes, I got permission to give you his business telephone number. So I currently bank with Veritex Community Bank. I looked at their rates today. It's 4.0%, but when I got mine, it was 5.5. So again, we just had a big dip in the market. So we're at 4.0 now. But when I got mine, I'm locked in at 5.5. So with my savings account, I was able to just go and withdraw money out of my account and pay for my airline ticket. That was my interest. It wasn't my savings, it was my interest. You know what I'm saying? So I think the minimum is $2,500 for the high yield savings account, but they also have a high yield checking account. And it's a personal checking account. It's a high yield checking account. And all you need is direct deposit set up with the high yield checking account. So let your money sit in there. And I'm telling y'all how I generate my extra spending money, my cupcake money, my nail money, my hair money without touching my bill money. I let my money go direct deposit into my savings account and direct deposit into my checking account. And I wait for the interest at the end of the month. And whatever interest I got, I know I can play with because it's mine. Or the
Free money.
You do it, you set a goal for yourself. But there's no point in having, and I'm just saying Veritex is a good bank, but I want to say this. You don't want to just go with Veritex because I did. Start looking at high yield savings account and high yield checking account banks that offer it. When you pull it up, it'll come up. But do your research on the bank. The reason I personally like Veritex is because whenever I call, my number shows up and they answer the phone like, "Hey, Miss Woods, how are you today? You know, how's life been treating you?" I'm like, but when I was going in Chase, it was like standing in line, they didn't know me. Like, I'd rather somebody know. Like, sometimes I might, like, because I drive, I might not have my ID on me. I go in there, they know who I am. They don't need me to, you know what I'm saying? Of course, you guys are not in this area, so you would be banking online majority because they do offer online banking. But like when I go in, they greet me, and I don't even have to pull out my ID. I just get my deposit slip or my withdrawal slip, and they just like, we have full-blown conversations, and they remember stuff like, how's the clothing business going? How's this going? Did you do anything? Did you sell the house? Oh, I saw you sold the house. I saw you sold the house. Like, those are the I like businesses like that. I'm big on customer service. So I implore you to do something for yourself right now, because this tax season, we all finna get these little bit of income tax back.
Invest in yourself.
And find stuff that we know we want, but we really don't need. I'm trying to tell you to invest in yourself. Invest in your credit. Invest in your savings. Invest in your children. Invest. And this is like a safe investment. It's not like you're going into the stock market or you're going up, you're trying to buy stocks and all of that stuff. This is a safe investment, and it's FDIC protected. I just say do something for yourself. So next Tuesday, my screen will be up and I will be doing illustrations. I'm gonna have her share her phone number. Tell them what state you're licensed in.
Michigan, Georgia, and Texas.
And Pammy, I just reinstated Tennessee specifically for you. I just reinstated it. I'm waiting on them to send me to upload it. It usually takes anywhere from 48 to 72 hours for them to upload it. California, Georgia, Ohio, Texas, Pennsylvania, Tennessee, Florida, Colorado. I got like 25, but those are the ones that North Carolina, South Carolina. Those are the ones that I know off of the top of my head. Oh, wait, what am I doing? I can just go to Nipper real quick. But if I'm not licensed in your state, don't let that stop you from reaching out to me or reaching out to her.
It takes 2 minutes.
It takes 2 minutes. That's it. That's all. And we'll just be done with it. You know what I'm saying? And then I also want to give one more example before I go, because I know a lot of people have this one insurance company. I'm not gonna say their name. I'm gonna be sued, but it started with a P, and it sounds like the United States of America. And I remember, because I had them too. I had them first. Before I did any of this, I had them first. And what I'm saying is this: they always promote you putting your kids on your policy as a rider. Don't put your kids on your policy as a rider. Don't do that. Get your kids their own policy. You don't have to get an IUL, but get a child's whole life. And the reason I'm saying this to you is because if something happens financially and your premium is $146 with you and all of the riders that you have added on there, and you don't have $146, the policy cancels for you. It also cancels for all of your riders. Mm-hmm. But if you have your child's own policy, You can put the $20 on their policy. You can put the $20 here and catch it up and then pay for yours later, or pay for yours first and catch the kids up later. It's easier to come up with different money than it is one big lump sum. It's easier to come up with a little bit here and a little bit there than it is to come up with one big lump sum. It's no point in everybody's policy canceling because some life was life and you couldn't pay.
And as they get older, they can take it over and they can pay it, and they'll always be insurable. So if you get it when they're younger and they still have it at 60, if they could develop any heart disease or diabetes, they're insured. They can't deny them.
They don't have to go through underwriting again.
Mm-hmm.
That's it. That's all. And that's the thing that I gotta push the biggest, because I see so many 19, 20-year-olds, you know what I'm saying, 25-year-olds that are, you know, doing things that they know they ain't supposed to be doing, they know we wouldn't approve of, and we don't know that they doing it. And now all of a sudden we gotta plan a funeral.
Yep.
Because this is the game of life. We never know what's gonna happen. We don't know what tomorrow holds. And we cannot watch our kids 24 hours a day, 7 days a week. It's impossible. It's impossible. So I implore you to do something for them. I know we all had this mentality, it don't matter where I'm going after I'm gone, but the reality of it is people are losing their kids every day. Every day. Unfortunately, this is the society that we in. You got to be prepared, because you don't want to have to be faced with that and then have to go back to work
right away. Mm-hmm.
Right
or
away.
Do a GoFundMe or sell chicken dinners and all this other stuff. So.
Yeah, because I literally met a young lady. Well, I didn't meet her. I've been knowing her for a long time, and she lost her daughter to cancer under the age of 30. It was unexpected. And when they found out, it was stage 4. She's not insurable. The mom didn't have a policy on her. She had to reach out to family and friends to get the help. But not only that, she got them 5 bereavement days. That was it. And she couldn't afford to stay home any longer because she still got 3 other kids that she's responsible for under the age of 18. So she had to go back to work. So here she is at work trying to hold her life together because her firstborn is no longer with her. Unexpected. Like that's a lot. That's a whole lot. I implore y'all to think about
it. Be proactive, yeah.
Because we don't know. You know what I'm saying? We don't know. We don't know if it's in the milk. We don't know what's causing it. And I mean, if it's not homicide, then it's cancer that's taking these kids. Yeah, so it's just something to think about. But I'm not gonna hold y'all. I promised y'all an hour, and it has been 49 minutes. I'm open up the floor for any questions that y'all have. You have 2 experts on here that this is what we specialize in. She might know answers that I don't know. I might know answers that she don't know. But this is y'all opportunity to ask whatever questions that you have. Would y'all like me to drop the link? I'm going to drop the link. Hold on. Or even if you want her to do a quote for you, since I can't do it, I'm going to be able to do it. I'm going to be able to do it Tuesday. And then don't let your health issues deter you from getting insurance if you have some, because we do work with some guaranteed issuance companies, which means they guarantee that they're going to issue the policy for you. It may cost a little bit more. It's still going to be whole life, but it's a guarantee issue.
Something is better than nothing.
Yep. Even if you just got to do 15,000, if you can't afford 30, at least pay for the actual service, because the average funeral costs $15,000, and that's without all the bells and whistles. You might not be able to get, the service. You might have to have a repast at the house, but at least you ain't running around trying to push the funeral off for 20 days. I think the max now is 20 days, right?
To gather the money, yep.
Yeah, 20 days. They give you 20 days to gather the money. At least you're not trying to push it off for 20 days to gather the money. These are things that, and I know that I'm giving y'all a lot to think about, but these are things that are so majorly important. And unfortunately, it's our community that don't have it. It's our community that don't have it. So I'm going to go ahead and put your number in the chat, because I'm going to save this live for the people that want to come back and watch it later on.
I posted my information.
So this will be saved. You can reach out to her or me. We didn't even get into the personal loans. So what credit score do they start off with? What's the lowest credit score?
Preferably 600 and up.
Okay.
But the better the score, the higher your chances.
The better the score, the more you can get. Because 600, you still might get the bare minimum.
Yep.
So the better the score. And y'all have my number, of course. Let me put it on here as well.
So Pammy has a question. She stated that she paid off she paid 3 points when she paid off her car. So because that longevity of that loan is no longer reporting, you will lose. So it's almost like you're penalized when pay off. When I paid off my house, my credit score went down. When I sold my house, it showed loan paid in full, my credit score went down, because you lose those years of longevity of that loan reporting your credit.
So the way around that is to go get some additional credit from somewhere else to kind of like new credit. But let me tell y'all what
you can paying off your car because you don't have a car note.
Right. So let me tell y'all what I did. I had student loans. I had like I think $35,000 worth of student loans. And when I came into a little bit of pocket change, I was getting ready to pay the whole. Here y'all go. And the girl on the phone was like, don't do that. Don't do that. So I still got $900 worth of student loans, baby. I'm giving them $60 every month because I don't want to lose them points.
Yeah.
I don't want to lose them points.
Because that's credit history. The longer the loan, the longer the history, the better it looks.
Yep. And so what I'm doing is I'm going to pay the $900 off, but I'm going to spread it out as long as I possibly can. I just didn't want to take that hit paying the car off and the student loans off all at one time. I didn't want to take that double hit. But I've had my Navy Federal credit card. I have my Amex card for quite some time. I just need like 2 more years to get up there so that it'd be like 10 years of worth of strong credit history. and then I'm gonna pay the $900 off. But until then, they're gonna get that little funky $60. They can get that $60 till they can't get that $60 no more.
I understand. Yes.
Yeah, slow pay works the same way. Late pay, it'll kill you. It'll kill you credit wise. Hey, Pammy, how are you?
Hey, excuse me. Okay, this is, kind of pissing me off because you work hard to get, to a certain point. And I have not had a car note in probably at least 25 years.
Mm-hmm.
Because I've always been in that position where, I go get a new car or I go get a newer car. And the reason why I did that was so that I would not have the expense of having to repair, a car, because I had 3 kids, no child support, give me a fiddle and I'll play your sad song. So here I am. I'm like, I'm about to get this car paid off. And look, I just went up them 3 points. I wasn't thinking when I made that last payment that was going to go against me. It just didn't even dawn on me. And now to hear y'all say, you know what, that goes. And I'm like, you know what, that's bull crap, because the only way you're not going to be, in that type of position is to already have money. You see what I'm saying? Because I just turned 60. And when I get in this car and I drive down the street, and I only been 60 since March 3rd, I am like, get in your lane. Don't stop. Don't even, because I want to see what it feel like
to not have a car note.
$500 and some dollars in my pocket every month. And then I go look at my credit report and they took the 3 points they just gave me.
Yeah.
Wait, you said $900 for a car note? Lord,
no, $500. $510. Girl, no. Shoot, I want to see that 5, but it's just kind of,
you feel penalized.
It's just, it's like, come on, people. I'm trying to get there, and I'm proud of myself because, for one, I have my 3 boys looking at me. Well, the youngest one, when he found out I paid the car, he was like, "What you gonna buy us?" But anyway, I have them looking at me. And their father is deceased, and he didn't do what he was supposed to do. And of course, we all know I can't teach them to be mean, but I really want to teach them to be responsible.
Absolutely.
When I leave here, I want them to be able to, I'm the bank.
Let me ask you this, Pammy. Do you have Navy Federal?
No.
Okay. Do you know anybody that can get you Navy Federal? What other credit unions do that? I know Navy Federal does.
Okay, what about if it's a ex-military person? Can they do Navy Federal?
Yeah, they can do Navy Federal. So listen to me. Let me give you some free game with Navy Federal. You know how you just said you was paying that $500?
Mm-hmm.
Go ahead and do 3 months. 3 months.
Mm-hmm.
So you'll put that $500 to the side for 3 months. Once you get it put to the side for 3 months, take it to Navy Federal and get you a $1,500 loan. But it's going to be you're going to self-fund your loan. What is it called again? Let me look it up. Hold on 1 second. Let me open mine.
Because my father-in-law is ex-military, and he'll do it, and he's one of those financial peace people, and he already at the beginning of every year, he already has his light bill and everything averaged out, the whole 9 yards. And so
wisely.
Yeah. Oh my God. You know what? When I first met him, when I was in high school, I was like, this man is, but I get it.
But now we understand.
I get it. And I get it. I get it.
It's called a pledge loan. So you want to
pledge loan.
$1,500. Let me tell you how the pledge loan works, okay?
Okay.
So this is how I pay my car off. I'm just giving y'all free game. What worked for me might not work for you, but this is how I was able to get my credit where I wanted it and to pay my car off and to be credit worthy. So I took, instead of paying cash for the car like I was going to, I went and put it in Navy Federal in a pledge loan.
Pledge loan.
Navy Federal sent me a payment of $232 a month.
Wow.
Okay. I give them they $232 on the 14th of every month. On the 16th of every month, they give me my money back minus 4.5% interest.
Ooh.
So
Maybe-
I get them
maybe
232.
better.
I get like 212 back.
Oh.
You see what I'm saying?
Yes.
It's my money. I get it back.
I wrote this down.
So I'm saying do that.
I'm in a better spot than I ever have been, and you know, it would have been nice to be 30 where I am now, but you know, it took a lot of hard struggle, mismanagement,
You and me
Um,
both.
girl.
Living and
But
learning.
I didn't have money when the kids thought we had money, you know, so I just wish that I had known before now. And that's why it's important for me to teach them. I've got 2 of them that just got LLCs. And I keep telling them, I said, you got to talk to, and I have to say this. I said, you got to talk to Blueface Auntie, because I know that. And then they be looking at me like, Mama, what do you know about Blueface? What? And I'm like, look, don't, I'm in this. But, you know, so I'm trying to teach them things, and they're going in the right direction. I just hope I can be here long enough for them to get through to the other end. You know,
Yeah,
because I am the
my
bank.
LLC pays my LLC. So my LLC is with Veritex Bank, and then I pay myself a paycheck out of my LLC every 2 weeks into my Navy Federal account. It's already set up. It just automatically transfers from my business account to my personal account, and that's how I got it set up. So you see what I'm doing here?
Yeah.
That's the money.
LLC
Yeah.
to generate wealth for me. You know what I mean? So
listen, and then I'm gonna get down. So I had I had several credit cards, and in the process of trying to knock stuff off, I just happened to be at the bank one day and got to talking to them, and I had thought about taking out a loan, and then I wound up getting a credit card, and I transferred everything to that credit card. And what I do is I had an 18-month, you know, what is it, same as cash or interest free or whatever.
yeah, interest
And
free.
so, you know, and I had been in a situation where I did something like that before, and I didn't have it paid off. And of course, you know, it ballooned, and that was all my kitchen appliances. So, you know, so I already learned my lesson on that.
You
So I
missed
had
that
already
18 wait, hold on. You missed that 18 months. Is that what you just said?
no, not this one, but on my I bought I had to get a refrigerator, a stove,
Mhm.
and the microwave and dishwasher was just, you know, because I had to get it and they need to match. But so I did the 12 months same as cash. You know, oh, this is gonna be good, and da da da. And life happened, and that 12 months came, and I had not paid it off.
And
I
that
am not
interest rate went
kidding
to
you.
24.6%.
I like to have
Yeah, real
that.
quick.
That's
like
why
to
I
have
don't do
that.
that same as cash. I rather
Oh
take
my
cash back. All my
Mm-mm.
cars are cash back. I don't do that interest-free stuff in 18 months, 12 months. No, let me get a cash back. So every time I swipe, they're gonna give me a portion of that back versus me doing it because I'm never gonna make it on time. I'm gonna
Right.
something's gonna happen.
Something's gonna come
Now
up.
it's gonna be
Girl,
$12,000 instead of
y'all.
$4,000.
When I say I got that next statement, I couldn't blame nobody but myself. What I did was I just quit even looking at it. I just made the payments and just quit looking because I was sick. It was atrocious when I say what they put back on there. So
Right.
never ever have I done that again. But with this one, when I went in for this 18-month deal, I already had it calculated. And one of the reasons why I did it, and I'll just be 100% honest, y'all. When I went in that bank, I was just trying to make a deposit. I wasn't. It was the way I was treated and the way that I was looked at. And it pissed me off. You know, I already knew he thought that I was not going to be able to do it. And when I let him do everything, and his whole tone changed.
And that's
His
why I don't fool
whole
with change.
tone changed.
That's why I don't fool with change. That's why I don't fool with change. Nope. Can't do
I
it.
was ma'am, miss, and all that. So I immediately came home. I decided what I was going to put on there. I calculated out, you know, how much I needed to pay in order to stay within that 18 months and all of that. But I also rolled everything over. And so a week ago, I was looking at some and I said, I don't owe them because I knew I rolled it in. Well, this particular small credit card has an annual fee and blah, 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 blah. So I called and I was like, what is this? Da, da, da. And
You didn't close it, did you?
no,
Don't
no, no,
close
no,
it.
no,
Yeah.
no. No, what I
Don't close-
did,
Wait, hold on, Tammy. Don't close no credit card.
I
Don't
did
do
not.
it. It's suicide. Do not do it.
Yes.
Keep it. Don't let no credit card close. Don't you close it and don't let them close it. Keep it and just keep it. Don't
Well,
let
what
them
I
close
did
it.
was,
You're gonna lose 100 points off the top. Gone.
well, see, she was like, first I was like, well, Darren, if I'm not using it, and then I thought about it, I was like, what are you talking about? You can't, close this. And so I renegotiated the interest rate and I had them take off because they break the annual fee down by month. And I had them wipe away 6 months of the annual fee. I accepted the lower interest rate. And then in 6 months, I can call back and get them to do it again. And that'll be the annual fee for this year that I had them, remove because I had to learn how to wheel and deal. I had to learn how to wheel and deal. And it's unfortunate that, when you get something paid off, you can't leave it behind because it goes against you.
Mhm.
Right. So speaking of that, let me touch on something else before we close out, guys. The number one reason that people get denied credit cards is because you guys are not properly filling the application out right. You need to, before you do a credit card or a personal loan application, you need to make sure that the address on your driver's license matches the address that the credit bureaus have for you. You need to make sure that there is only one address on your credit report. All them other addresses, you need to remove them. You don't need to be linked to that. You need to make sure your employer is listed on your credit report as an employer. Because when they do the application, when it goes to underwriting, if it's peanut butter and honey and not jelly, you're not getting it. Got to make sure everything match. And that's the problem. Nobody taught us how to fill out a job application the proper way or a credit application the proper way. So
well, you know what? I did just see an address on my report. I had never seen that address, and it is an old address. And I was like, "What? Where did that come? Why do they have
Gotta get it
that on
removed.
there?" Well, I'm finna get it gone, and I appreciate all of your advice, and I want my 3 points back. But anyway,
well,
thank you.
Tomorrow, I'm going to list all of the creditors' phone numbers, and because it's more than just TransUnion, Equifax, and Experian. You guys do know that, right? It's more than just them. You got LexisNexis. You got CoreLogic. What's the other one? You have so many more.
Yeah, they're kind of behind the scenes, but they really not.
They're the ones that's giving the information to TransUnion, Equifax, and Experian. So just because you disputed with the 3 big dogs means nothing if you didn't dispute it with the little ones first, because they're the ones that's reporting your personal information to the carriers. And that goes for your car insurance too. Like, the car insurance is based off your credit, whether they tell you that or not. I did property and casualty for years. Yep. They're looking at your zip code, the area you live in. They're also looking at your credit score. They're looking to see if you had not late payments on your credit cards, late payments on previous car
bankruptcy.
They looking if you had bankruptcy. They looking to see if you had accidents. They're looking at everything that we do in this world right now is credit based. Period.
Welcome to the United States of America.
Start there. Fix your credit first. And she got her number listed there. She helps with the credit repair and the personal loans and the business funding. Start there first. But while you're doing that, also you need to make sure that you have something to leave to your children. Don't be going out here maxing out these credit cards and getting these good credit and you ain't got no life insurance, because they're not gonna be. When you pass away, they're gonna shut your bank account down. That's it. That's all. So they're gonna be able to go to the ATM unless they on there as an authorized signer, and get $500 before it's shut down. That's it. That's all. Whatever your daily limit is all they get. So we're gonna talk about wheels next week. We're gonna talk about putting the authorized signer on your bank account.
Please.
In an emergency situation, not somebody that's just on your joint account, but as an authorized signer it's called a contingent in the event of an emergency.
So beneficiary, whatever.
Beneficiary on your bank account, contingent, whatever. You need to, so wheels, life insurance, contingent on your bank account, beneficiary on your bank account. I know a lady, 87 years old, lost her husband, and she was not on his bank account because they had their own accounts. I help her file the paperwork in the state of Texas and take Chase to court to get her husband's money out of that account.
And that's such a long process.
And she still ain't got it. Probate court, she still ain't got it. So we're gonna cover that next week, next Tuesday. Her number is there. You all reach out to her. I always post mine, but I'm gonna post it again. You see Maine jumping here talking about some because he texted me and I ain't responding.
Tell him we busy.
And thank y'all for trusting me and Ms. Carmen Bradley with y'all financial literacy for tonight. We'll see y'all next week. And we're gonna talk a little bit more about financial literacy next week. And we're gonna dig a little bit deeper on things that you can do. And we'll be able to do some actual quotes on the screen next week. So you'll be able to see. So just be prepared to tell me height, weight, and date of birth. And a comfortable monthly amount. And we're going to give you a quote. It's going to be 3 of us on here next week. So we'll be able to give some quotes and let them see what's what and how to move. Okay? And then if we need to touch bases on credit, again, we can. But if you want to do a consultation with Carmen, just reach out to her. She'll do a consultation with you, okay? Y'all have an amazing night. Take care of you before you take care of somebody else. Love y'all. Peace.